Good afternoon. My name is Felicia Howard. I'm the sales manager and certified field trainer for Elite Mortgage, as well as support staff for Trans Global Lending. This session is going to cover just some Loan 101 basics with regard to how to take a 1003 application, how to pull credit, and the initial documents that you'll need to gather from your clients to submit the loan to processing. So my contact information is below. I'm easiest to be reached on my cell phone, which is 916-705-4038. You can also email me, which is also a quick way to get in touch at felicia.howard@elitemortgage-ca.com. Just to give you a little bit of background on me, I will slide this up. Of course, right now it doesn't really want to cooperate with me. Okay, there we go. I am originally from the East Coast. I relocated to California in 2005. I have a degree in business management with my major in management and a minor in marketing. My first job out of college was for the Olive Garden. I worked there for 6 years, but I wanted to get a better quality of life, and restaurant hours are very crazy. So I got into banking, and I was recruited by Ameriquest Mortgage in 2003, which was a subprime lender back then. I did get my broker's license in 2007, and during the mortgage crisis, I left Ameriquest and went to Bank of America and worked in their loss mitigation department, training on loan modifications, short sales, and deed in lieu of foreclosures. And then I went back to originating mortgages and have been with ERS since February of 2015. Okay, so we're going to jump right in, and hopefully everyone has Calyx Point. If you do not have Calyx Point, send me an email or you can text me. I'll make sure I get you on the system. That way you'll be able to originate your new loans. So we're going to jump over to Calyx Point. And for Trans Global Lending, when you come in and you log into Calyx Point, this will be the first screen that you see. And you can use your drop-down menus, and you'll see corporate leads, pre-approved leads, Trans Global leads. And for everyone that's working for Trans Global currently, you're going to want to jump in and look at Trans Global lending leads. And you're going to start there. Okay? Then you're going to slide over and you're going to hit New. Depending on whether you are BRE or DBO, you will choose the appropriate. So I will go with Trans Global BRE, and we'll hit OK. And then you're going to see this first screen pop up, and this is the borrower information screen. So everything that's in red are going to be the fields that you have to fill in before the system will allow you to save the information. So I'm going to jump right to processor. This is a list of people who could potentially be processing for you. Currently, Amy is doing all of our processing. So we're going to choose Amy Dang as our processor. And then under your originator tab, you can see that there are a variety of different loan officers, and you would just scroll to your name. You can also type F, like if I was looking for myself. I could go in here on the drop down and type F, and then my name would pop up. And then you could put yourself in there that way. So for the purposes of training, I'm just going to use generic information. So we're going to use John, and we're going to put Doe. His social security number is 123456789. Date of birth is 1/1/2001. Phone number 916-555-1212. And even if a borrower only has a cell phone number, If you just list a cell phone number here on the 1003 application, it will show up blank as the home number. So if the cell and the home are the same, just put it twice so that it will populate on your 1003 application. Email addresses will not show up in the 1003, but you do need to have an email address listed. If your borrower says that they do not have an email address, it would be highly recommended that you walk them through creating a free account on Gmail or Yahoo, because it makes it very time consuming when the loan is submitted if the lender is not able to send certain documents electronically to them. If we have to wait for mailing, it really slows down that process. So you definitely want to get going with an email address and assist your borrower with that. There are instances and scenarios where a client just does not have access to a computer or an email address. And in that situation, you can reach out to us in processing and we'll kind of walk you through how to navigate that. But in most cases, borrowers that do have email addresses have a much smoother process through closing. So I'm just going to put no email at gmail.com. Then you're going to come down to the next section where we want to have the current residence information. We want to have a 2-year history for our borrowers. So it's very important that you ask them the month that they moved in and the year that they moved in, because some people will say, oh, I've been living here about 2 years, and you'll put 2, but they may have only lived there for a year and 5 months, and then you're going to run into an issue where you have to source the previous residence information. So depending on whether they own the property or whether they're renting, you would choose that appropriately. I'll go ahead and say that they're renting and that they've been there for 2 years. We'll put 123 Main Street. And since I'm in Sacramento, I'll go ahead and hit Sacramento, California, and put our zip code in there. If this is a pre-qual, which means that you're just trying to see whether the borrowers can purchase a new home, then we would not have an address yet for the new property. So in that scenario, you would go ahead and type in TBD, which stands for to be determined, right, in there. And then unless they've told you otherwise, I always match the zip code of where they live to where they hope to purchase, unless they've said that they'd like an alternate zip code until they're able to find property. And if you tab, you'll see that it automatically populates in. Then you drop to the property type and you'll see a variety of different property types: attached, condominium, co-ops, high-rise condominiums, manufactured homes, PUDs. It's a variety. But if you're looking at just your standard single-family residence, you're going to go ahead and choose detached. That's a standalone single-family residence, not a duplex, not a condo, just a standard single-family home. Under loan program, you're going to go ahead and click that, and then you will see a variety of different options. So you have 10-year fixed, 10-1 ARM, 15-year fixed, 20-year fixed, 25, and 30. Most borrowers will be choosing a 30-year fixed as if they're buying for the first time. So you can just choose that until you pull the credit and take a look at what other options are available to them. So 30-year fixed, and then when you go to closing cost scenario, CC scenario stands for closing cost scenario. That's going to put the list of lenders that we currently work with. Now, all of these lenders that you're going to see in here are not necessarily the lenders that your particular brokerage is approved with. So you'll need to contact processing, or you can reach out to me and get your personal lenders list. That way you know exactly what bank you can price your loan with. But for the purposes of our example, I'm going to go ahead and choose LD Wholesale because that is one of the lenders that TransGlobal is approved with. And then you can see that minimum FICO is populated in here at 620. Depending on what kind of loan program you're looking at, that minimum FICO requirement might change. Minimum FICO is the minimum credit score that we need. And depending on whether you have one borrower, two, or multiple, you will have 3 scores, hopefully, when you pull credit from each bureau, which will be Equifax, TransUnion, and Experian. Actually, it's in reverse order. So you have Experian, TransUnion, and Equifax. So let's just say, for the purposes of an example, that the scores are 770, 702, and 745, and that we only have one borrower on the loan. The minimum FICO is irrelevant, so you don't need to worry about that. But if you're looking at the 3 scores that we have, you're going to choose the middle credit score. So we eliminate the high score and we eliminate the low score, and we will qualify off the middle score. So in this scenario, our high score is a 770, the low score is a 702, so the middle score will be a 745. Okay? That would be the score if you were calling around to the banks or using Loan Sifter to price your loan. That would be the score you would tell them is the qualifying score. Okay. Appraised value is just your estimate. So if you're talking to your client, you want to ask them up front on a pre-approval, hey, what kind of a price range are you looking at? How much home would you like to buy? Because you want to go with what, in their mind, what they would hope to qualify for, regardless of what the actual income will support up front, just so that we can kind of shoot for something. And then if we can't get there, then we can just kind of work our way backwards. Another great question that I like to ask my borrowers is, what's the most you'd feel comfortable with paying monthly for your mortgage? Because some people may want a $500,000 house, but they said, you know what, I don't want to pay more than $2,000 a month for my mortgage. So those two things may not match up. So it's good to find out what they have in their mind as their budget, so that you can tailor your scenarios and your loan amount accordingly. So let's just assume, for the purposes of our example, that the appraised value of our home is going to be $350, which will also be our sales price. And we will look at a conventional loan for our clients. There are different down payment options, which we will cover in a different video. However, for the purposes of this, we'll just go ahead and say that they're going to put a 5% down payment. And you'll see that the system automatically calculates that for you. So you have your appraised value, your sales price, hopefully should be the same. And then your down payment is populated at $17,500. Your loan amount is at $332,500. And then basically at this point, if you go to the bottom, most of this information is already pre-populated for you. Now we have the taxes set at the rate that is in California. Your tax rate will be different per state, particularly those that are living in Hawaii. So you're going to want to check with your title company for what the taxes are for the specific property that your clients are interested in. But for the purposes of our example, we have it preset in the system that the taxes are 1.25% of the sales price. So that auto-calculates for you to let you know that your real estate taxes are going to be $364.58. Your hazard insurance also is preset in here at 0.375% of the loan amount, which works out to be $103.91. In my experience, I have found that oftentimes the homeowner's insurance quote that the system generates is on the high side, and that the borrowers typically can get lower insurance, be it if you recommend a professional, if you have insurance services within your own company, you can definitely recommend. Make sure you tell the borrowers that they're not required to use your suggestion or your recommendation, but as a courtesy, you can provide them with an agent quote but that they are free to shop around for the insurance themselves. Okay, so at this point, you can see that all of the red fields are in, so you can go up to the top and you can save your file one of two ways, either by hitting File, Save, or you can hit Control S, S like Sam on your keyboard, or you can hit the floppy disk right here to save the information. When you hit save, you'll see that it pops up and it says use auto file naming. I recommend that you do that. It will set the template and save your file. You don't have to unclick it and type in the borrower's name. It keeps the format consistent for all of our loan applications. So you just can go ahead and hit save and it will be all done for you. Okay, so now that we have the basic information in there, before we fill out the rest of the 1003, we really want to go ahead and get this credit pulled to see whether we even have a viable loan. Because it won't matter about figuring out calculating income and figuring out debt to income ratios if the credit scores are not going to qualify. So I'm going to erase these scores for now, even though we're not going to really pull the credit. I just want to walk you through how to do it. Because we have a fictional application. But you're going to go to page 3 of your loan application and you'll see on the bottom it's going to say request credit. So when you hit request credit, a screen will pop up here. And for us at Elite Mortgage, our BRE loan officers pull credit through Advantage Credit Incorporated. Our DBO loan officers use Clear Choice Credit. Currently for TransGlobal, they're using Acronet Incorporated. So you would choose Acronet Incorporated. And you can see that everything is pre-filled. It will say Equifax, Experian, TransUnion. These are the bureaus that we're going to use. It says order a new report, which is what you want to choose when you're pulling credit for the first time. And then depending on how you're going to pay for it, you're going to go ahead and put your credit card information in here. There is a fee for running credit for an individual or a joint borrower. That fee ranges anywhere from $20 to $40. And there are subsequent credit charges that may come from certain tasks that require the credit report throughout the loan process. So it's important that you estimate appropriately to put that dollar amount in there because there may be more charges for credit aside from the original pull. So you want to make your borrowers aware of that, and if you're paying for the credit, also you be aware that you will have to incur additional fees as well for reissues, possible credit supplements, possible rescoring, whatever may come up throughout your loan scenario. Okay, so at this point, once you hit pay by credit card, it's going to prompt you to throw in your borrower's credit card information. So you would type in John Doe, 123 Main Street, Sacramento, California, 95828. You're going to go ahead and put the credit card, Visa, Visa debit, MasterCard debit. It does matter whether it's a debit or a credit card. The system sometimes will kick it out if you say that it's a credit card and it's really a debit card. So I'll just go ahead and say that it's a Visa credit card and we'll type in a number, 111-222-3333-4444. And we'll just go ahead and put a fictional expiration date of January 2020. You do need the 3-digit code that's on the back, which is one. We'll just put 123 for the purposes of this, and then you're going to hit OK. Then you see everything's up here. You do want to type in whether the borrower is married, unmarried, or separated. Then you can go ahead to the bottom, and you want to go ahead and hit Submit. Here is where you would put your account number, which typically will be pre-filled for you, but whatever your credit account number is, your username and your password for credit, which will be unique to you pulling credit. Now, if you have a corporate account and we're pulling credit through the corporate account, then processing can do this piece for you. But it's good to have your own login. That way you can pull your own credit and you're not tied down to processing turn times. So if you put this information in and you would type in, this is just fictional, I don't have an account with them, then you would hit OK. And then at that point, it would give you a credit retrieval. Now, of course, it's telling me that it's an invalid login because that's not real information, but that's what you would do to pull the credit. And then at that point, the credit would populate into your point file. And then you would have all of your trade lines in this section right here. So once the credit is populated, you can just go into page 2 and you can start inputting your employment information. You do need to have a full 2-year history on your employment information in order to move forward with your clients. We'll kind of talk a little bit about time frames, but if you have a self-employed borrower or an independent contractor, like loan officers tend to be independent contractors, or if more than 25% of your pay is commission, you're considered an independent contractor. You need to have 2 years in that line of work in order to qualify for your financing. So you can't start a new business within 6 months and use that income to qualify. However, if you were W-2'd, say you were a nurse and you switched hospitals, you worked from one hospital and you went to the next, you can do that. You can also sometimes, depending on the profile, switch line of work, which means that you were a nurse and now you decided you didn't want to do nursing anymore, you wanted to become a school teacher. So long as you have been on your job, and depending which loan program you get, in the range of 30 days to 6 months on the job, then you can use that income to qualify. How long you have to be on the job depends on the type of loan program that you end up getting. So for page 2, we're just going to keep it simple and we're going to put our borrower's information in. Let's just say they work at ABC Corporation, which is on 5550 Main Street, Sacramento, California, 95828. Let's say they're a manager, 6000000. They've been on the job. Years on the work means how long have they been in this line of work, not necessarily just this job. So they have been in this line of work for, let's say, 6 years, but they've been on the job for 2 years and 6 months. In the event that they did not have 2 years of employment, you're going to want to come down here and hit New, and you would type in the previous employment information. If they have a part-time job, you can use it. If they have had history of working 2 jobs, and this one part-time for 2 years, which means that if he worked for ABC Corporation for 2 years and 6 months, but he's only had the part-time job for the last year, they will not use it. Right? You will not be able to use that part-time income to qualify. However, if he started his part-time job 2 years ago and he's been working at ABC Corporation, so he worked 2 jobs for 2 years, one of them part-time, one of them full-time, then you can use both incomes to qualify for your loan. You would put that information in this section here. Okay, and then you would hit Save and Close. For income, this is where you would hit your income. For base income, the system will make it pretty easy for you. If they're paid weekly, you can just type that they pay weekly. He's paid $20.75 an hour. Oh, I'm sorry. Let me take that back. He's paid work hourly, 40 hours a week, $20.75 per hour. It will automatically calculate your income for you. If he gets paid a flat amount monthly, like for a lot of state of California workers are paid monthly, say he gets $5,500, right? Monthly, they will calculate the income there for you. If it's semi-monthly, means that they get paid either on the 1st and the 15th or the 15th and the 30th. So it's a set day of the month. That's different than biweekly. Biweekly income would be 26 pay periods per year. So you just need to calculate that income, understanding that you have 26 pay periods to calculate. So that's for income. You can see under here that you have overtime, bonus, commission, dividends, net rent, and other. So if I'm scrolling down, overtime bonus can be used if it's been received for the last 2 years consistently, and when we order a verification of employment from the borrower's employer, they check the box on that verification that says the overtime and the bonus is likely to continue. It's very important that they make that statement that it will continue. So when you're looking at your pay stubs, look for overtime and bonus income, and before you just blindly put the figures in there thinking, oh, well, they work a lot of overtime, I want to use it, we have to make sure that they have been receiving it consistently for 2 years and that the employer acknowledges that overtime is likely based on the type of job and industry that they're in. Okay? Sometimes people are on a fixed income. So you would go down to the bottom and you'll see here where it says borrower for B/C for co-borrower. If your borrower has any type of additional income, you can plug it here, put your B, look at your drop-down menu, and you'll see things like alimony and child support is a common one, okay, that people have. Another common one is Social Security disability income. Also another common one is pension, okay? So these are things that are addition to regular income that a borrower may have, or it may be their only income. So if that is the case and they are receiving Social Security, they're on a fixed income, you would put that down here. You would not put that under monthly income, okay? Because this is only for wage earners, either self-employed or W-2. So if our borrower does receive Social Security, we would go ahead and stick that in there and we would put the amount, and it is the gross amount. It is not the net. So you want to get the award letter, a Social Security award letter, which is issued annually in January, and put the gross amount that the borrowers are receiving for Social Security. So we'll just put, for the sake of argument, maybe they get $1,700. Okay? And then the final piece is your assets. So you want to ask your borrower what accounts they have. Checking account, savings account. Do they have a 401k? Do they have an IRA? Do they have stocks and bonds? Anything that they may have, you want to strengthen and beef up your application. Now, if you are doing a cash out refinance, you do not need to list any funds in here, because anything that you list in here, they will require to be sourced with the last 2 months statements on that account. So if you don't need it, you don't need to list it, because it's one less thing for you to have to verify. On a cash out refinance, because you are getting cash back from your loan, you don't need any funds to close potentially, so they will not require that. Unless you need what they call cash reserves, which say, for instance, you're doing a cash out refinance on your primary home, but you also have a rental property that you're not doing anything with, but you do own. They will require 6 months of mortgage payments in reserves for that property, even though you're not refinancing it. So sometimes you may need assets even if it is a cash out refinance. As we're going through our asset section, you're just going to go ahead and hit new, and you'll look at the drop-down menu. You can choose checking account is most popular. You can also go down to savings account is also popular, and we're just going to go ahead and list it. Let's just say it's a checking account. Up here, it's with Wells Fargo. And you don't need to put the whole entire account number. I typically will just put X's and the last 4 digits. So let's just say 1, 2, 3, 4. And then you want to put the balance showing on the statement from the most recent statement that the borrower has provided you. So we're in September. If you got an August statement, you would put that ending August balance in here. So let's just say it's 5,000. And then if you have additional accounts you need, you would just put save and new and continue on. And you'll see that your Wells Fargo account is now listed under your checking and savings accounts. Okay. This section down here where it says other assets, boat, jet ski, RV, personal property, you don't need to put anything in here. The lender doesn't really look at those types of assets as strengthening factors for your application. So it's not necessary for you to get into all of those details with your client in order to qualify them. However, things that are liquid, which would be stocks and bonds, if they have a life insurance policy that has a cash value, those are the types of things you would like to list on your application, and you would put that in this section right here. Okay. Then you're going to go down here and you're going to put in your real estate owned. Now, we were doing a pre-qualification for a new purchase, so obviously our client does not own any real estate. But if our borrower did own real estate, you would put in their property address right here, and then you would match that liability to the credit report. You would have a mortgage listed right here. You would put your current property address, and then you would match them to let the system know this mortgage is attached to this property. All right, so now we're going to move on to page 4 of the application. Page 4 of the application is your declaration questions. It's going to give you a summary of your loan, but a lot of the numbers in here you won't be filling in until you actually get fees in, and we'll do a separate video talking about inputting fees into your point file. But this is just an overview on how to get the basic information, borrower information, pull the credit, list the income, list the assets, and fill out your declaration questions. Under this section, under declarations, you're going to need to hit yes for a Y for yes and an N for no for these following questions. So you do want to ask your borrower clarifying questions, because it will save you a lot of headache, because sometimes you may miss something really key in this section, which may be a deal killer for you, and you just overlooked it up front. So you really want to make sure that you dig in and get this information from your clients. Are there currently outstanding judgments against you? Judgments being debt that a creditor has put against the borrower, or perhaps there was some work that they had done that they didn't pay for, like landscaping or construction building, and they did not pay the people who did the work, and they put a judgment against their credit stating that they're owed money. These types of things have to be resolved and paid before you can move forward. So ask your borrower if they currently have any judgments that they are aware of. It may not show on the credit, so you do want to ask that. Have they been declared bankrupt in the past 7 years? If the answer to that question is yes, get the date that they had the bankruptcy discharged. It should also show on their credit report, but it's just good to get a verbal, and then you can backtrack and get documents as needed. Have you ever had a property foreclosed upon or given title or deed in lieu thereof in the last 7 years? Which means, have you lost your home because you didn't make the payments? Did you voluntarily give back the home in a deed in lieu? There's waiting periods for certain loan programs depending on if you had a foreclosure or a deed in lieu. Are you currently a party to a lawsuit? Ask your borrowers, are you currently involved in any litigation? That may be a factor for the lender to give you a loan if they think that you might either have financial harm or obligation that you need to pay, or possibly incarcerated and you wouldn't be able to keep up with the mortgage payments. Have you been obligated on any loan resulted in a foreclosure, transfer of title, or judgment, which means it may not have been your house. Perhaps you co-signed, or perhaps you were on title, even if it was someone else's loan. Even if you were on title and it was someone else's loan, there's a certain obligation that you have to that property, and the lender wants to know if you were a part of that. This is a big one. Are you presently delinquent or in default on any federal debt or any other loan, mortgage, financial obligation, bond, or loan guarantee? If you are currently in default on any federal debt, such as student loans or taxes, income taxes, you are not able to get certain loans, particularly government loans, FHA, VA, USDA loans. Those have to be cleared up and current in order for you to move forward. Also, with conventional loans, the guidelines are a little different, but you just want to know whether they have any federal debt that's currently outstanding so that you can address that up front. Are you obligated to pay alimony, child support, or separate maintenance? That doesn't mean are you receiving alimony or child support. Are you paying it? If you're paying it, it needs to be included in the debt to income ratios if that child support is going to be owed going forward for the next 3 years. So you definitely want to get that cleared up front and get any paperwork that the borrower has with regard to that. Then is any part of the down payment borrowed? I'm going to go ahead and stop really quickly so that I can charge this laptop. One moment. Okay, so we were on, is any part of the down payment borrowed? If they're borrowing funds that need to be repaid, then the lender needs to know that. Typically, the easier way is for the borrower to get a gift from a family member with a gift letter that states that the funds are not to be repaid if they're looking for additional money for closing. Are you a co-maker or an endorser on a note, which means have you co-signed on anyone else's mortgage? Are you a U.S. citizen? Are you a permanent resident alien? Do you intend to occupy the property as your primary residence? Have you had an ownership interest in a property in the last 3 years? What type of property did you own? PR is primary residence. SH is second home. IP is investment property. How did you hold title? It would be sole and separate, or with your spouse or other. The bottom here is information for government monitoring purposes. A lot of people want to choose, I do not wish to furnish this information, but if you received any documents that show the borrower's ethnicity, which we always ask for a color copy of the driver's license, then you have to, as a loan officer, make your best guess to ethnicity. The easiest way is to just ask your client. If you didn't ask them, but you do have color photo ID or met them in person, you do need to list something, and they can always give a correction if it is wrong. But you do want to list something here. You can't list, I do not wish to furnish. So ethnicity would be Hispanic or Latino, or not Hispanic or Latino. And then race, you have American Indian or Alaska Native, Native Hawaiian, or other Pacific Islander, Asian, white, black, or African American. You can choose multiple options. It doesn't have to just be one. And then you have to choose a sex, which is female or male. You do need to also say how you took this application, face-to-face, mail, telephone, or internet. The interview date is what's going to start your TRID disclosures. So the day that you take the application is the date that you want to list in there. Oftentimes, though, the initial 1003 that you fill out is not going to be signed by you. You wouldn't necessarily send the borrower this form unless you were doing the disclosures yourself or through processing. The way a lot of our lenders work is that they will disclose for us. But if you are doing the disclosures, or we are working with a lender that requires us to do the disclosures, then we would put that interview date as the day that we received the information. So that is basically everything on the initial 1003 application. We fill out the borrower information page, then we jump over to page 3 to request credit. We want to go ahead and pay by credit card, put the information in there, and hit submit. Once the credit is populated, we're going to go ahead and put in our income, which is on page 2, 2-year history for employment, 2-year history for residence. Then we're going to jump in and we're going to put in our income, be it hourly, yearly, monthly, biweekly, etc. We're going to also scroll down. If the borrower has any fixed income, we're going to go ahead and list that with the options here. Okay. Then we're going to jump to page 3, which is going to give us our assets. We would go ahead and fill in whatever checking, savings, or other assets accounts they have. Make sure that we're putting in, if it's a refinance, that we put in their current properties, or even if it's not a refinance, if they're purchasing a home but they have rental properties, etc., you want to go ahead and list all the borrower's properties, even properties that they do not have a mortgage on, because they still owe real estate taxes and property insurance on those homes, which need to get factored into the debt to income ratio. So even if they say, oh, well, I only have loans on 2 houses, but 5 of them are free and clear, you need to list everything. And also some programs limit how many homes a borrower can own in order to get that loan. So you want to know how many they have total. The lender will find out on the back end. They run a report against the borrower's name and social to see how many homes that they currently have outstanding. So it's not like you can hide that information. So you definitely want to disclose it all up front. Then you're going to go to page 4, which is going to give you all your declaration questions. You want to go ahead and fill those out with yeses or nos, right? Then you also want to fill out their ethnic information. So you can choose any option there based on either visual, asking the borrower, or their driver's license. And then the interview date, which you have here. Okay, then you want to save all of that information. And that is the end of just a basic overview of filling out your 1003 in Calyx Point. I have sent you detailed links from Calyx Point directly, which go over more options on how to use features within Calyx Point, but this is just a high level to get you going on your first application. Thank you so much, and we will be back for additional videos with regard to mortgage loan programs and a little bit more detail on credit.